A company's management might not sound like the most interesting subject in the world, and usually I'd be kind of bored too, because with a lot of companies' management, I don't know that I really get to know them that much. Like it's just some big leadership on the top. And since you don't know them personally, it might be a little harder to want to care about a company's management and a stock you're interested in learning about, but you have to find a way. And you're listening to Investing Mastermind Podcast. I'm Michelle Markey.
And I'm Signe Lundholt.
And the reason why I say a company's management might not be that interesting is half the time we don't know who the company management is until we start digging into a company, or maybe you've heard of a rock star CEO taking over a business. Like, for example, I like bringing up Starbucks because I used to work there and I still care about this company. But there were some almost unheard of CEOs that had been running Starbucks ever since one of the key founders, Howard Schultz, had stepped down. And some of these somewhat unknown CEOs, it was hard for me to want to care about. I didn't know anything about them. They didn't seem very interesting. But now there's a hotshot CEO named Brian Niccol who brought Chipotle Mexican Grill to a great place of growth. And he's got a great reputation. So can this manager who has a fabulous reputation with Chipotle bring his magical management techniques also to a company like Starbucks that is very storied and had done well in the past, but lately has kind of fallen off the path and has just been fishtailing for a while and not really progressing as much as probably investors would like to see in such a strong coffee business. So we'll see if a manager like Brian Niccol can help turn things around for a company like Starbucks. But management is something we'll dive deeper into in this episode. So, Sina, what comes to your mind when you think about management?
I think you're right. When you hear the word management, you're like already falling asleep. When you hear the word, it's kind of, it's probably, this is probably going to be a really tough episode. I think I'm just going to go to the spa instead of listening to Investing Mastermind podcast today. But actually, and we've talked about this in the past, Michelle, that I kind of like gossip. I'm sorry, I'm low like that. I really, really enjoy some good gossip. And if there's a place to look for gossip, it's when you're looking into management, right, for a company. And it sometimes can get kind of exciting. I'm not saying it necessarily have to be bad, or it's kind of like, ooh, okay, so where was this person before and what happened? And I think it's kind of interesting. So for me, just trying to find out who is the manager, where were they before? And you actually talked a little bit about it, that in Starbucks, there was a little bit of trouble and some CEOs made some mistakes and had some pretty wild announcements they made and were interviews for the news and came out with some pretty juicy things. And that's just where, for me, that's how I can get hyped up about management. Because when you hear it, it's like, oof, you see gray suits, maybe button-down shirts, and something that's maybe complex when it comes to investing. Oh, it must be super complicated. But if you turn it around, sometimes it can actually be kind of interesting and put a smile on your face because it's like, whoa, okay, what went down? I wonder what went down in the company when that happened. So
Yeah, I
sorry, I'm
think
low like that.
one of the companies that reminds me of is, wasn't there some drama at Foot Locker? Like, I think you may have told me a little bit about some of that gossip before and
I don't
some
know
of,
per se with the Foot Locker, but talking about that, great to talk about management for that actually, because they just been acquired by Dick's Sporting Good recently. So they aren't a publicly traded company. I think they must have been acquired by now. But the reason why I've been following that company is actually because of their manager, Mary Dillon.
mm-hmm.
So Mary used to be heading up Ulta Beauty and did an amazing job in Ulta Beauty. Absolutely incredible. And then she was on the sidelines for a while, and then she took over being a CEO of Foot Locker. And I was following along because I was very curious, what is she going to do with this business? And what she did was that she sold it to another publicly traded company, Dick's Sporting Goods. So I think she is absolutely amazing. I love following Mary Dillon. But I want to say right now, Ulta Beauty has a new super interesting CEO, Kesia Stillman. She's posting on social media and things like that. And that's something I like to see that. I like to see that she's visiting the stores and now she's speaking here and as the NASDAQ at the NASDAQ exchange, pushing the button and things like that, just following along and following her on LinkedIn. And that's something I do with management that actually makes it kind of fun. So we haven't been digging into numbers or anything yet, but those are maybe more fun parts of actually following management. But if we had to talk about numbers, which is actually also interesting, so follow along. What would you look at, Michelle, if you were to determine, okay, so Signe, she's talking about Mary Dillon and Kesia Stillman, and you're talking about Howard Schultz and all these different CEOs and founders, etc. What would you look at actually when it comes to numbers to determine are they performing well or not performing well?
Yeah, so some of the numbers, which we won't get too much in detail about, but at the high level, some include return on invested capital, which is a measure of how much equity is being generated in the company as well as how much debt there is. So there's one measure of return on invested capital that people could look at. Another metric could be free cash flow. Like, is the CEO able to have positive free cash flow in the company? And is the CEO trying to promote a lot of dividends, or are they investing more internally by not giving out dividends? And another number would be if they're doing a lot of share buybacks, that could either suggest that they're buying their stock at a reasonable price, that's good value, and that's generally a good thing to do if your stock is at a reasonable price. But if they're buying back shares when the stock is not reasonably priced, then that could be a signal that the CEO is not so good. So those are just some of the numbers. Signe, are there any in particular that you like to also study?
I totally agree on that. And to speak more about return on equity, that's kind of when we talk about Buffett style investing, that's something that's like, of course, cash flow of the business is super important. Like Buffett, he likes to see a business that's, I think what Charlie Munger said, something like gushing cash. We love when a business, who doesn't love cash? And when you invest in a company, invest in a company that is amazing at generating some cash because they can use cash to invest in growth, or if they have any long-term debt, they can use the cash to actually pay off the long-term debt if that's something they want to do, or they can pay that dividend to shareholders that you mentioned, so we get some money back. So cash is amazing for a business because you can do all these things with cash. And when the company grows, the stock grows. So that's why we like to see all that cash. And the other thing you mentioned with return on equity, that is like, whoa, okay, it's that word, it's like, what does it mean? And what it really means, if you had to relate it to yourself, an exercise you can do, and that many people like to do, is to actually calculate your own net worth. So it's an exercise that's kind of fun to use. So the way to calculate net worth is to look at what do you own? What is something that you already have? It could be you own part of your house. Maybe you also have a mortgage, but there's a certain percentage of your house or amount of money in the house where you actually own it. Maybe you have some savings. Maybe you already have some stocks or other kinds of investments. So you take that, and on the other side, you have maybe some debt. It could be that you have some mortgage or things like that. So you kind of mortgage, you wouldn't necessarily take that into your net worth calculation. It's more debt where you have credit card debt, or maybe you still have some debt from being in college or things like that. So it's mortgage wouldn't necessarily be a part of the equation, but the part of the house you own would go towards actually your value. So you can calculate your net worth. And what's interesting is that equity, I know that there would be some economists and people that will come and say, no, Signe, you can't really say that. But just to explain it to you people out there, you could see equity as part of a company's net worth. What are they really worth? And the return on equity just means that what is the business growing? How well have the management been doing at growing the business? So that's some of the things we could look at, like you say.
Yeah. And also what they do with some of their free cash flow, like you're saying, Signe, like the cash that they have stockpiled. For example, Berkshire Hathaway has about $381 million, and that's like 35% of their market cap, which is a little over $1 trillion now. So now it's a big question of what is the new management of Berkshire Hathaway now that Warren Buffett has retired at the end of 2025? What is the new CEO, Greg Abel, going to do with basically a third of what Berkshire's Hathaway overall kind of quote unquote net worth or market cap, like current market value is? He's got so much money to do something with. He could buy whole companies if he wanted to, and maybe Berkshire will do that. That would be a pretty good strategy if this management wanted to buy more companies to grow Berkshire internally. So if Greg Abel is able to find strong companies that can help add to Berkshire's bottom line and grow its equity, that would be one strategy. Another strategy is to invest in already existing business initiatives to help grow some of their existing subsidiaries. And other strategies include, like we've talked about, issuing dividends with all that cash or buying back stocks. But lately, you know what Berkshire's not been doing is buying back their shares because they probably think it's not the best value right now. So even Berkshire is just settling for 3 to 4% in basically treasury bonds, which is like a cash equivalent almost. And they're getting such little return. But I think they're waiting for a big opportunity to really invest all that cash. But they would rather sell stocks right now that they've owned. Like they'd owned Apple for a long time and were bringing that down a little bit. They'd been culling some of their Apple shares that they owned. They still own a lot of it. I think it's still their number one holding. But it just goes to show that Berkshire is not just going to keep buying back their shares at whatever price it is, because maybe they don't think it's a great value right now. And they're not going to hold on to shares that they think is the maybe overpriced. So they're willing to let go of some Apple, and it's at some of the highest it's ever been, but yet they're just adding to their current cash pile, which is probably not earning as much as it could be if it were invested in an actual other business or being put into internal initiatives. So we'll see how well of a management team the current new team of Berkshire Hathaway will be.
Yeah, and that's actually something me as a business owner thinking about this. I mean, it must be a really difficult situation for them that they can't deploy all that cash, because I would think that it's because they can't deploy it, because having so much cash, it's as a business owner to just have that cash, that would not help your business. To have all that cash as a business owner, you would want that cash to grow and not just kind of be stagnant. And that's just where I would assume they're in a dilemma there, that it's so difficult to deploy that cash since they don't do it. Because to me, it is absolutely insane to have that much cash just doing nothing. And it's been for years and years and years and years that they have so much cash that, yeah, they could invest. As a business owner, looking at it from that perspective, I'm like, why don't you set it free? What's wrong? It must be because they can't invest in something where they believe this is going to grow Berkshire Hathaway more by deploying it.
Yeah. So these are so many interesting questions that we should ask of management team. And we can also read their annual letters to shareholders. I think that's where we learn a lot about their management philosophy, like Warren Buffett had for years written one to shareholders. So let's see if Greg also issues one to shareholders, and then we can get some insights into how he will run Berkshire Hathaway. And there's so much more we could probably say about management, but I think we've given our listeners a lot to chew on. What do you think, Signe, about any last thoughts on management?
We didn't get to dive too deep into it today. Look at ROE, look at ROIC and see, okay, are they growing the company? Like I said, if the company is growing, the stock will grow too. So if the company expanding, and besides the letters, so not a whole lot of CEOs today are writing letters, but what they're doing is that they're participating in what is called earnings calls. So whenever there's quarterly report or an annual report, the management will do like a short Zoom, or maybe it's just like a phone call, and tell shareholders, tell the world, how is the business doing? And you can listen into that too. If they don't publish a letter, that's the way to kind of keep updated on the business. There could be so much more to dive into with management. So continue to listen to the podcast, because I'm sure in a future episode, we'll dive even more into some of these things. And next time we have another interesting topic, something that you need, again, to look into before you invest in the stock, before you go out and buy the stock, you need to be looking into management, staying within your circle of competence. And then next time, maybe you want to share, Michelle, what we are going to dive into.
Something called moat, which Warren Buffett has talked a lot about this. If you read his annual letters, you'll learn a lot about moat. And a moat is what gives a business staying power. It's what helps keep the company having a certain competitive advantage that keeps it from other competitors attacking its business. For example, Apple has a tremendous moat. In not many businesses can offer the high quality level of products that Apple offers, as many consumers know, using the iPhone and iPad and MacBooks. These have a lot of staying power. So we'll dive into that more next time.
Yes. So we will be back in 2 weeks from now.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.